You're watching today's video technical update presented by FX Times. It is Monday, April 5th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. The euro continues to be pressured as commodity currencies begin the week strong. I'll follow up with the euro dollar, dollar Swiss franc, dollar Canadian dollar, and the euro pound pairs. This video is being produced at about 2 p.m. Eastern Time, ahead of the US session close. First, let's take a look at the euro-dollar pair. Here is our swing projection from last week as the market made a reversal, and this is sort of a engulfing pattern. The week started this week without any strong conviction to the downside, but let's take a look at the 4-hour time frame. The 4-hour time frame shows this sort of three-legged advance, and you saw each leg sort of decelerate until we hit 1.36 right at the 61.8% retracement. So we didn't have a full swing projection to the 1.3650 because the market here decelerated and now is testing this reversal pattern. It's so one, we have this is reversal, sort of a Gartley, and that looks like that has completed. But then we developed head and shoulders with the neckline right here, right above 1.3450. So if the market breaks below 1.3450, which it's struggling to do at the moment, but if it does break below that, and it could establish another high that's below this previous 1.3550 high, then the market is likely to continue a downswing. And when you project this swing here, you see the market going to the 131 area. So around 1.3050 is our swing projection if the market breaks below 1.3450 in the Asian/European session coming up. Here's a look at the Swiss franc pair, dollar Swiss franc pair, as it has completed its second leg up and showing some correction. Here is a full projection from the first swing down, but the market is supported above 1.05, which is a coincidence of this power line as well as this 200 moving average and this rising support. So lots of support here. The market took to that and looks like it's bullish in the short term, but until we break either the resistance or support here, we are in very short term attempts. Okay, so looking at the 4-hour time frame, we see the market did support this pair above 1.05, came back up, broke a very near term power line here, power zone here, just below 1.06, and the market is looking like it's staying above 1.06 after breaking this near-term resistance. So the next, it's very likely now that in the Asian European session coming up that the market will now test this next important level, which is right here near 1.0680. So that's the next near-term level to watch for, and that's actually where the market is testing this declining trend line, coincident with all these other indicators. So here, if the market breaks above, I would give it some room. If it breaks above 1.07, you see here, if it breaks above 1.07, we may have a continuation rally. And being that this would make it a three-legged rally, I would project the third leg up with the first leg up, and that would bring the market to about 1.1, 1.11. The Canadian dollar, as well as Aussie, New Zealand dollar, these commodity currencies have been benefiting lately, as of late, and we saw that in other commodities such as oil and gold. So the Canadian dollar market is strong. Here, US dollar, Canadian dollar continues to slide. It's nearing parity. But the projection here, you see a swing projection of our first of these three swings. The middle is longer, so we're going to duplicate the first and third. and that brings us to 0.99. Expansion of the second swing brings us 61.8% expansion brings us to 0.9920. So this area right here, just above 0.99, seems to be a good, viable short-term target now that the market has broken below our previous low here. The previous low being 1.0060, broken today. Market seems to be hovering right now above 1.0. There's low volume trading on this Easter, post-Easter Monday, but I would think that I would look for some bottoming action near 1.0 parity level. I wouldn't expect such a strong retracement, although that could be possible, but I would look for a pullback, and if that pullback is around some, tops off around the previous power line here, a decline, a bearish signal should indicate a swing towards 0.99. Okay, so that's the dollar Canadian dollar. Momentum very bearish, not oversold yet in the daily. It is oversold in the 4 hour, so anticipate some kind of correction, although it shouldn't be very it should be a very short correction, and you could actually use your Fibonacci level. Let's say it goes to the parity level. You could go like that. So here's your 38.2% and your 26.3% are a probable short correction. Okay, so look for that topping, and then again 0.99 is our intermediate short intermediate term target. Finally, here's a look at the euro pound pair, as the market started with a gap down, and it looks like it's going to close below 0.8850, which was an important power line. You see here, as it is also coincident with this 200-day moving average, which has been flat so far within this. It's been flat because the market has been very flat here since 2008 in this triangle pattern. So the market looks like it's going to test the support of this, and the second swing actually is an expansion of 150 to 161.8%. If the market tests our rising support. So this second swing right now, it's already extending past 100%, and further expansion should go down to near the 0.87 area. Okay, so that would be a short intermediate term target is 0.87. Looking at the 4-hour time frame here, this gap that started the week and the inability to close that gap also shows bearish. It's a very bearish signal, so that's confirmation for your outlook in the short intermediate term towards 0.87. I would wait for the market to close actually be below 0.88 and see if there's any kind of pullback. You see the market started the week with a very near-term pullback, but I would like to see a more significant pullback attempt to establish this as a power line 0.8850, and then maybe we would have a decline towards 0.87. But the main thing we should look for here, as the market converges and your reward to risk ratio declines, what you might want to look for is a bounce from this. You want to see bottoming action from here, and as the market before this congestion pattern has been bullish, you may want to follow the bullish outlook more closely or more aggressively than you would follow your bearish outlook, even though we are basically in neutral mode in this long intermediate term. The long term has still been a bullish mode, so look for a bounce here, and then to retest this previous resistance and anticipate a break, but don't try to anticipate the break below, as that is a less likely event. Okay, but if it does, also look for a pullback as always, as this is going to be against a major trend, against a major bullish trend. But because of that, if it does break and if it can establish a bearish mode from here, that's going to be an intermediate term to a long-term kind of outlook instead of your near-term, short-term outlook right now towards 0.87. And that's all for this Monday. Visit fxtimes.com for more analysis updates and educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.